Welcome to Infinity Capital, everyone. Today we are going to discuss Medicure. It's a company which makes medical devices, right? So they export plastic medical disposable and surgical devices. They are a top exporter of plastic medical disposables and surgical items. So they let's check at the revenue breakup. So consumables are contribute around 51% to the revenue. Equipment contribute to around 40%, implants around 5%, and reagents around 4%. So, which therapies are these medical devices used in? Infusion therapy 70%, blood management and collection 9%, surgery and wound drainage 5%, anesthesia and respiratory 4%, urology 4%, right, and others 9%. So these are the therapy areas wherein their products are used. They have around 260 distributors, and they cater to around 5,000 private and government hospitals in India. So 30% of their revenue comes through domestic sales, 70% comes through exports, right? So majority of their income is coming from outside. Okay, they have around 8 manufacturing facilities. 5 are in India, 1 is in China, 1 in Egypt, and 1 in Italy. They also have an R&D facility in Faridabad, right? So they have around 300 patents to its name, 190 plus pending applications, right? So a lot of these devices have patents. So if you are making a device, you need to apply for a patent, post which only you can start selling them. Some of the devices are off patent, so you can start making them and selling them. But the devices which are under patent and the patents have not expired, you cannot, make these devices. So it's a highly regulated business. It's a business where no new player can just jump in and start making money, right? So you have to be in the business for a very long time in order to understand how the business functions, what markets are you going to cater to, right? Who are the big players, what sort of price affordability you can give to your clients, and how can you maintain the quality of the product, because all of these products are being sent to Europe and America, and they have strict regulations with respect to what is the quality of the product, right? So they are planning to expand their manufacturing facilities in Faridabad and Jaipur, right? And who is the competition? Some of the biggest names in the industry: Baxter, Becton Dickinson, Boston Scientific, right? So it's not easy to compete with these names. They've been in the business for a very long time. They have the expertise, the patents, the know-how, the technology, the best R&D, best top-notch people available, right? So it's not easy to compete with these guys. What is the advantage for Indian companies? The cost. So if you can sort of tie up or do mergers and acquisitions and buy some companies which have some sort of technology, and sort of amalgamate that and start making some new products, you can have a fair advantage in terms of cost. So this is the reason why one can look at Medicure. Now we are going to go through a series of other things to understand why we are looking to invest in this company, right? So this is not a regular video, guys. I have just started doing my analysis on Polymed, like today itself. So I'll be doing a thorough research on this company, reading conference calls, annual reports, the past 5-6 years, in order to understand what is the trajectory of the business and so on and so forth. I'm going to share a few things which I've figured out today. So company was started in 1997. They have expansion of Faridabad plant, JV in Egypt, so on and so forth, right? R&D center they established in 2016, new R&D center, acquired a company in Italy, right? So so they also have basically has a fully staffed highly equipped R&D section approved by the Ministry of Science and Technology, by the GOI, right, wherein they are doing all sort of R&D, working on making new products, right? So this is what the company is about. The products, the therapies that they are catering to: oncology, infusion therapy, urology, anesthesia, respiratory, dialysis, so on and so forth, right? So quite a diverse range of therapies they are catering to. All right. Let's go through their ratings. There, it's very important to go through a company's ratings and understand what's happening. 250 crores of bank loan facilities, which is rated A1, pretty good, right? And they did a QIP as well recently, wherein some funds have bought a good amount of stake in the company. I'll show you, which are those funds as well, right? And so what is the key strengths of the company? So majority of their revenue is coming from IV cannula, contributed to around 25-29% of the total sales. So this is a key product, that is contributing around 25-29% of the sales. So this can be a good thing also, it can be a bad thing also, because one product is contributing to around 30% of the sales. If the sales of this product dips, something goes wrong here, it can have a very adverse effect on the company's overall sales, right? Strong operational efficiencies. So operating margin is expected, like 20-23% over medium term. Financially, balance sheet is pretty strong. What are the risks in the business? So fluctuation of raw material prices, forex rates, because they are selling their products out of India, right? Susceptibility to change in regulations, yes, because products are being sent to Europe, America, right? It's a very high quality conscious market, right? So all the units have been audited by US FDA. Audits happen periodically. So if in a particular audit, the US FDA finds that the plant is not functioning up to the proper standards, then there could be problems with the company, something that one needs to take cognizance of this thing, right? There's a lot of competition, right? So players like Baxter, Bebron, Boston Scientific, right? These are some very well established companies which have some great R&D capabilities, top-notch people working in those companies. Not to say that we cannot Polymed cannot compete with them, but you need expertise, you need time in the market in order to understand the market, the quality, which are the players. You need the technical know-how as well. It's not so easy to make these products. It's very safely guarded, closely guarded business, right? So about the company was incorporated in 1995. Himanshu Baid and Rishi Baid, the promoters of the company, manufactures IV cannula, blood bags, blood collection tubes, infusion and transfusion sets, right? I believe they have forayed into some new products also. So once I do a deep dive, I'll make up a very detailed video of Polymed in order to understand what sort of new products they are working on. Currently, they don't have any conference call, so I'll have to figure out, like what's happening on that front, right? So this is it on the credit rating front. We will quickly go through the shareholding pattern. So promoters hold around 45%, public holds around 55%, but there's some interesting stuff happening here. Mutual funds hold around 2%. Then alternate investment funds, not much, but foreign portfolio investors, if you see small cap world fund, Lighthouse, equity, so they have some good amount of stake in this company, right? You have to understand, guys, that these funds do their proper due diligence and they have a very long-term view on the company. This fund is not going to sell 5% of its stake in the market tomorrow, right? So it's not a PE company, it's a fund. So PE companies can do a quick in and out. Mutual funds don't usually do that, right? So that's that. 9 and 5, 14% is the only amount of shares available ready to trade with public. Then there is Ashish Kacholia, is a very well-known investor, right? So some marquee investors in there. This is a big investor, which has around 13%. This company has around 9% or so, right? So very well concentrated. The stock is, the shares are in concentrated players' hands. Retail only has around 9 and 5, 14, 14, 15%. So, I don't expect some very heavy fall in the stock unless and until something goes bad. But in a very highly concentrated shareholding pattern, the possibility of a very huge fall in the company goes pretty less. Also, we are in a bull market. We have to take that into consideration also as well, right? I'm going to go through the shareholding pattern on trend line. If you see December, there was absolutely no, very minimal mutual fund holding. Then it became 2%. FIIs only held 3.75% as of December. Now they hold around 13%. Promoters have diluted their stake a little bit. They held around 49%. Now they hold 44%. Right. So where has this 5% gone? So they did a QIB. When we come here, when we come on the balance sheet and we click on the equity history. So if you see, the share capital has increased. Earlier there was 44 crore shares, now 48 crore share. So they have done a QIB of these many shares. Okay, so when you multiply this by 520, you will get around 450 crores, 400 crores. That roughly comes to around 5% of the total market cap of the company. And essentially that is the amount that they have diluted. So they've raised money, right? Another interesting thing about the industry, the medical devices industry. So this is a blog. This blog is written by Suchi Nahar. She's on Twitter. I follow her. So you can go and check this article. So the Indian medical devices market stood at around 77,000 crores in 2020. Market is expected to increase at a CAGR of 35%, from 20 to 2025. So even if I bring slash 5% from here, if I think, okay, these numbers are very bold and pretty tall claims, let's say we slash off 5-7% from here, still the industry would be growing at 25-27%, which is pretty good. If your company is in an industry which is growing at a CAGR of 25%, and if you're doing very well, you can grow at a CAGR of 40%, 35-40% very easily, right? So 77,000 crore market, and let's look at the market cap of Polymed, only 9,000 crore. What is the sales that they are doing? Only 800 crores, profits of 136 crores. This company is just about getting started, guys. So let's not get fixated by the price. In fact, I was looking to buy this stock in around Jan or so. From a pure technical perspective, the numbers were pretty good last year as well. There was clear traction in the profitability. However, I did not buy it. Now the stock is double. But I'm looking to buy this stock at this price. So when you are making long-term investments, price does not make much of a difference, right? So my study is still on. Once my study is done, I'll share an updated video as to what parameters I'm looking at. So let's on the industry analysis. So it's a big industry, big addressable market. There is good room for growth for Polymed, right? So there are around 14,000 different products as per the global medical devices, and the products range from wound closure pads to stents, IVD machines, medical devices, so on and so forth. There are new medical electronics, so in medical devices there's a lot of electronical products that they are coming, information communication technology play. So there's a lot of tech that is coming into the medical device industry as well. So that's a new market which is being developed. So India is among the top 20 markets for medical devices, right? And 75 to 80% of our medical devices are imported, and exports is of 14,000 crores. Okay, so we import 80% of our medical devices from abroad. Now the government of India has come up with some schemes, right? So 100% FDI for medical devices to boost the market. Plus they are also working on this medical park. So let me show that over here, right? So AIMED invited Japanese investors who are interested in setting up a manufacturing basis for medical devices, right? So India is targeting 1200 technical collaborations with Indian investors, right? So this is what is happening. Another thing is that the government plans to invest significantly in establishing medical devices park in 4 states: Andhra, Telangana, Tamil Nadu and Kerala, right? So this is something interesting. What are the devices? Uh, so medical devices consist of instruments, apparatus, machines, implants, in vitro reagents, right? So on and so forth. There are variety of therapies. There's so many things that are used. A lot of things that are used, guys. It's a host of products. Sky is the limit for this industry and this in for this company as well. If they are looking to expand their horizons, look at targeting new products, new markets, right? So this is about the industry. Do read the blog. It's a very informative blog. Suchi Nahar. You can just go and type it in Twitter and find that. Right. So what are the things that caught my interest? One is that marquee investors came in. So FIIs have come in pretty in a very big way in this company, and they have accumulated this stock between December and June. Right. So between December and June. December 2020 and June, right? So the price is up around 100%. It's pretty natural, once stock is being accumulated by big players, by institutions, stock is definitely going to go up, right? So let's just go through their cash flows and ratios. Pretty healthy cash flows. Cash flows are almost doubled since 2015, right? On the balance sheet, there's 100 crores of borrowings, pretty negligible for a 9,000 crore company. We spoke about the dilution lately. They did a QIP, it's pretty all right. 350 crores of investments, around 30 crores of cash on the book. So they have around 380, 390 crores. Pretty good. Very robust balance sheet, pretty good. On the profit and loss front, before we go there, see the stock price CAGR, 38%, 5 years, 37%. 3 years, 65%. Stock has been a massive profit generator for investors, if you've invested at lower levels. Okay. Constant rise in sales, constant growth. Sales have doubled since 2016. Profits have gone up by 200 basis points as compared to last year. Profits are up around 40%. Sales are up. They have decent, very good operating profit margins, around 24-27%, and they are able to maintain this profit margin. In fact, their profit margins have gone higher. This may have happened due to operational efficiency. So guys, what you have to keep in mind, if a company is doing pretty well and they understand the business, after some time, operational efficiency kicks in. They know the business, they know the raw material, they have very good inventory management, and once they start managing it perfectly, their operational margins start going higher. Plus medical devices are very high margin business also, so chances are that this might become these margins might go higher as well. But we need to do a competitor analysis in order to understand what sort of margins the competitors are making, right? On a PE front, stock looks very expensive. The median PE is around 29. Stock is trading at a PE of around 71. It went up till the PE of 83. So the max PE it reached last time was around 65, 70, and so from a price multiple, it is very expensive. 70 times PE looks expensive, right? Price to sales also, it is pretty expensive. Right, so what am I looking for? Two things can happen in this company. There could be a time-wise correction or a price-wise correction, right? So from a price correction perspective, the stock corrected around 25% from its high, but it's not enough for me to just start go and buy in. So I'll be doing more research on the company in order to make my thesis strong as to why I can buy this stock at this price, at these multiples, these valuations. There is absolutely no debt on the company, so I'm comfortable over there. There are return on equity is pretty good, ROC is pretty good, right? So we'll have to dive deeper. There's dividend payout as well, right? So healthy dividends are being paid out. So that's pretty good. Cash flow on a 3-year, 5-year, 7-year, 10-year basis, cash flows are increasing. Excellent, right? So looks pretty good, overall. Now, what are we looking for from a technical perspective? Let's do a technical analysis. Let's just to dial it down, go back a little bit and understand what happened. So if you see, the stock was pretty much caught up within this range between 120 and 300 for 5 years. This is 15. It broke out in August 2020 and then it went up. It's up around 200%. So if we look at it from the price point perspective, almost all the stocks with great earnings are up 200-300%. So this price wise it's pretty all right in my opinion. IPO came around 2011 or so. Okay, so when we are doing a long-term investment, we have to understand a lot of factors about the company before we jump in and buy in. I mean, once my thesis is clear, I might just go and buy it at this price. Then I would look at what am I looking at. I might say, okay, I might not make money for the next 1 or 2 years, right? And whenever the stock corrects, I start accumulating. So it's a very different ball game as compared to the other trades that I do, on a short-term basis. There, I don't want to wait for 2-3 years. I want to make money in the short term, right? So from a technical perspective, what can we look at? So let's say that the market were to correct and suddenly the stock comes closer to the 200 DMA. Let's assume that it corrects by 30%, right? So that is somewhere I would start accumulating the stock, considering the fact that my thesis has played out. I've read the annual reports. I like the company. I see some sort of growth trajectory, in the company, understand the industry and so on and so forth. So this is, so on the technical front, not much we can say, because, when we are doing a fundamental analysis, price rarely matters. Yes, for 70p it looks expensive, but I don't generally pay attention to high P's. If there is some sort of growth in the company, I would look to buy it. I don't mind waiting for 2-3 years to make money, right? Because long-term investing is a very different ball game. So this was the analysis, guys. I just came across a few blogs and a few other things, and I found out that this company looks pretty promising. Most interesting thing I see is that with at a 77,000 crore addressable market size, the Indian medical devices market 77,000 crores. This company is only doing 800 crores of sales and 136 crores of profits. At 77,000 crores of market, it's addressable market, they are not even doing 10% of sales, right? So huge upside available for this company, in terms of where the business can go. We'll have to understand, I'll have to delve deeper. What is the vision of the promoters? What sort of continuation plan they have in terms of, like how long are they going to be on the board? What is the board of directors like? Whether it's a techno fundamentalist board, techno commercial, whether there are some technical people on board, whether there are people who have some sort of degrees in science, who are scientists who are on board, who can help them with the R&D and stuff. So that would also be a plus. So overall, it looks pretty good. Thought I'll make a video on this and share it with you guys. Right, this is an educational video, guys. It's not a buy sell recommendation. Thanks a lot for watching.